Good morning, America. Thank you for watching Taxes Made Easy. We've got a lot to cover today, a lot of interesting news from both sides of the political aisle, good and bad. And we're going to focus today on what should you be doing now to prepare for tax season. And I know a lot of people are holding on to things. They're holding on to the breath, waiting for the election to pass. And I think a lot of us are going to breathe a huge sigh of relief once the election's over. Um, Regardless of which way it goes. But we've got a lot of things to touch on, and we're really going to go through some of the key points, things that you need to do to prepare now to be ahead of your taxes and rule your taxes like a boss and not be reacting to it. So that's really what we want to do is help you learn how to make your taxes easy and be ahead of the game. So again, stay tuned, and we'll be right back after this break. Welcome back, everybody. We've got a lot to cover again today. So we're just going to dive right into the first story. And believe it or not, we actually have some good news. So this is from the Epic Times. Pending home sales register the biggest annual increase since May of 21. So that is actually a very good thing. People out there, a lot of people have been waiting on the sidelines for the feds to finally cut rates. And a lot of prospective buyers are coming in now that the feds have cut rates. Now the thing is, it's hard to kind of gauge things. People want lower interest rates because it will make a big difference over the long haul. However, you can always refinance and get a lower rate. There are costs with that, but it can save you a lot of money if with time interest rates go down. Historically, though, we're at historic norms, if not a little bit below historic norms as far as inflation and interest rates on homes. It's just that our government loves to put the thumb on the scales and mess with the numbers. Hence, it leads to all kinds of distortions in the market. Um, so again, it's pending home sales, so it's not home sales that have gone through, but again, rose 2.5% in August, and this is the biggest monthly jump since January 2023. And on a yearly basis, it rose 3.1%. So again, largest increase since May of 2021. So a good thing overall. A lot of people are coming in. The conditions are right. But one of the things they are warning here is you had a high of 7.22% in early May. Now it's down to 6.08%. And some people are waiting, thinking there's going to be another Fed cut. Might be. There's been whispers both ways. Who knows what the feds are going to do? But that was a low for September 25th. Since then, it's crept back up to 6.44%. What's going on with that? More demand. So again, you had this drop from 7.22 down to 6.08%, and that was the market anticipating a large cut. Everybody pretty much knew that the Fed was going to make a cut by that point, and they had already priced that in. If you waited for the announcement, you were getting on the boat a little bit late. So it's hard. Try to do what's best for you long term. If you're trying to game the system, and come in at exactly the right time, it can be very tricky. So Della Campa here is this quote from him. There are a lot of swing factors like job support, presidential election that could cause the housing market to take twists and turns. If you find a house you love and can afford to buy it, do it. It's not a horrible time. Mortgage rates are still down from their peak, and you're able to negotiate more because homes have been sitting on the market. So if you're sitting there and waiting forever, you very well could miss out. And this goes more to the affordability of homes. Yes, they're very pricey. Things are high. Will housing prices ever come down? Who knows? That's yet to be seen. But if they do come down, or if the interest rates drop, you can always refinance your home. So again, it's yet to be seen what will happen with the presidential election. But I think most of us are just ready to have it over with. Moving on to this next um, topic, and this is something, if this is part of federalism. Different states can decide what they want to do, how they want to run their state, and we see the consequences of that, good or bad. Now, Washington residents, being a fairly liberal state, overwhelmingly support taxes on the wealthy. So they have a new Senate bill 5486, which is introduced last year, and this is a wealth tax on assets over 250 million. Now, this is not going to hit a lot of people in the state of Washington. There's very few people it's going to hit. But the idea is to take that money and use it for kids because, of course, that's how you sell new taxes. We're going to help the kids out. Again, California's horrible at that. It's just, every new tax, we're going to use it for the blind and disabled children. No. But again, it's always, we'll use it for K-12 education. While they pass a new tax, they take more funds away from education, which is what typically happens. So it's interesting that 66% said they support the tax. And this is Seattle Times, a local newspaper. But very done a little bit more is a caveat. 44% they prefer cuts. Now the 44% said they're fine with new taxes, but they need to make cuts. So they want lawmakers to trim the state budget because they think they are wasteful. And 67% of respondents said the government wastes some or a lot of tax dollars, and then less than a quarter said the state was responsible with the money. I'd like to have that quarter, get the quarter's head examined. Um, it's interesting. There's a lot of support for this tax, but when you flip it and you look at, okay, what are some other alternatives? Should we actually be more responsible with spending? That number shoots up. So I thought that was a little interesting. But one of the things it mentions, I just want to finish up with this. Um, State has several billionaires, the Gates, Bill Gates, and then Melinda Gates. They're not divorced. And then you have Microsoft CEO Steve Ballmer, Mackenzie Scott. The interesting thing is they used to have Jeff Bezos, the third richest person in the world. But what happened to him? He moved to Miami. So he's gone. Moved to Florida. Elon Musk is moving everything out of California, mainly because California is almost driving him out of the state. But it's interesting when you go after the wealthiest, what tends to happen is people move. And again, I'm sure Bill Gates can vacation or reside wherever he wants, but you hit him hard enough in the pocketbook, they'll move. So again, it's just it's just consequences. Whatever you tax, you're going to get less of it. So moving to the next article, this is a very short article. So IMF chief says higher prices are here to stay, and that's the IMF chief, not the ad. So this is Kristalina Georgieva. Sorry, I'm probably butchering this. And shows this is from the UN, International Monetary Fund. It says the pain we all feel because prices have gone up is here to stay. I wish we could take these people and send them back to send them to a rigorous course in economics. They don't have to stay. We've had inflation. Inflation normally is here to stay. But one of the biggest costs globally is energy. One of the biggest things that drives costs, especially up for Europe, is all the social welfare programs they have, and they've had mass immigration problems. They've been going through the same issues of open borders, etc. And with that, yeah, you're going to have massive inflation. You're going to have prices going up. And so it's going to be a concern because who does this, all this idea of we need to help the poor, we need to help the poor. One of the things that hurts the poor the most is inflation. And instead of doing something about it. They just say, "Oh, it's here to stay. We can't do anything about it." There are plenty of ways to make things more affordable to encourage innovation, but too often these globalists do the opposite. And we need to spend, spend, spend on, overspend. Well, the government, if the government's paid things down and we're in debt, it would help so much more. So she was in California when she made these comments. Um, again, just reporting on what she said. I don't agree with it though. I do think there are plenty of things that can be done to address this and address the cost burden that are affecting people. There are plenty of times we've had amazing economic growth in this country and in the world, and usually the leading globalists or people running the UN, etc., are dead wrong most of the time. That's my opinion for what it's worth. Moving to the next topic. This is from the Associated Press. Germany's economy is on track to shrink for a second straight year. Now, Germany is the largest economy in Europe, the strongest economy. And what have they been doing? They've had a left-leaning government. They've had massive immigration. They've had a lot of problems within their economy and their issues with crime, etc. And their GDP is actually going to shrink this coming year. So when you have stagflation, high interest rates, and low to no growth, this is exactly what a lot of people feel we've been going through. Very little or no growth in our economy, and you have a lot of inflation to go with it. So they're complaining, not complaining, but they're stating that there's Germany and Europe are stuck between China and the U.S. and they just need to tackle a lot of issues there. One of the big things is energy supply, making sure they have enough to run their energy or run their economy. Trimming the bureaucracy, government overspending, and we see the same problem throughout the world. And when you see some people making massive, massive changes, like in Argentina, you see things turn around or start to turn around. Um, but you have to go against the grain. You have to do what politicians hate to do, and that's cut spending. Again, this is the last time they had 2 years of the government or economy shrinking was 2002 and 2003. So when we look at other countries, it can be very instructive as to what we have here and how to move forward. So we are coming up on another break. We're going to focus on um, some of the policies coming out of the Trump campaign and the Harris campaign. A lot of tax issues coming up. And as we discuss this, hopefully this becomes very informative as we head into the election. I've got pros and cons for both campaigns. And so it's going to be, we'll hit both sides of it. So stay tuned. We'll be right back. Welcome back, everybody. And we're going to jump to some, national news, and we're going to spend the rest of the time talking about national topics here. And the first one is about marijuana. So, Florida, and this is where Governor DeSantis breaks with Trump, or Trump broke with DeSantis. And I think it highlights the difference between Trump. He's not your traditional social conservative. He just isn't. So there's a lot of things that he's socially conservative on, but not all. And you can tell that by his lifestyle. And I'm not trying to criticize him for that, but I just who he is. And so he says he'll vote yes on Florida's marijuana amendment. Main reason why he thinks it should be legal. He doesn't think people should be jailed over this. There's a few reasons, pros and cons, why. And so I think it's interesting that he'll vote for a ballot initiative that would make legalize recreational marijuana. Governor Ron DeSantis is opposed to it. Um, the question is why? So again, under the proposed changes, you can possess up to 3 ounces for personal use, no more than 5 grams in a concentrated form, and that's for dabs, oils, vape cartridges, and edibles. Um, would allow medical marijuana treatment centers, and again, it's just part of this. It's so crazy that our laws that it's illegal federally, but so many states have made it legal. Um, and so Trump generally is not opposed to the legalization of marijuana. I don't think it's an issue he would hang his hat on or really fight for, but he does think it makes sense to pass common sense laws um, to legalize it and let people use it. I'm a veteran myself, disabled veteran with dealing with chronic pain, and I have for the past 25 years, more than 25 years. Crazy to say that. But as a veteran, I can't touch marijuana because it's illegal federally. If I go in and I get my blood drawn or anything and it shows up, I could lose my veteran benefits, which again would be very crazy, even though I'm self-treating myself. So there's a lot of people that could use this for medical other reasons cannot due to the disconnect between federal and state law. However, um, DeSantis took a stand against it, and he said it would turn Florida into San Francisco or Chicago. So the problem is Florida already has a huge drug use problem, and adding softer drugs in um, creates problems. I mean, just drug use in itself leads to problems, um, whether it be you know the opioid abuse, that went on and affected even Rush Limbaugh. He was addicted to opioids from dealing with severe back pain, but it causes more DUIs. It causes people, it leads to harder drugs. And again, with the border wide open, we have such a problem with our streets being flooded with extremely dangerous drugs. Fentanyl not even being the worst anymore. There are worse drugs coming in now than fentanyl. Um, and so you criticize the limitations. And personally, when you go to a sporting event and you take your family, I took my family to a football game a couple months ago, a college football game. When we got home, we had a shower because my kids and me, we all smelled like marijuana. People weren't smoking immediately around us, but in the general area. And as we were walking to and from the event, we passed people where there were clouds. It was like you were walking through a cloud of that. Nobody talks about or cares about secondhand smoke when it comes to marijuana, but they care all day long when it comes to cigarettes. So again, to have a kid-friendly area, kid-friendly zones. It's a problem when you're having youth sports and people are smoking up at a youth event, and kids are smelling, breathing in marijuana as they're trying to play sports. Again, it's in my opinion, I agree with DeSantis, but most states are going the other direction and slowly approving marijuana state by state. So whether or not you're pro or against that, it's just something to understand where he is going. And we have this next article from CNBC providing a critical look at Trump's tax plans. Now, the headline itself is misleading. So, Trump tax plans could exempt 93 million Americans from income taxes. That's not what the article says at all. It says for it could reduce or exempt 93.2 million Americans. So they're saying that his tax plan would help 93 million Americans pay less in taxes. Doesn't mean it's going to exempt them from taxes, but again, just this key point could leave roughly 93.2 millions off the hook for at least part of their income taxes. That is the real headline there. So And why are they going after these? Again, this is criticism that he has faced, and I agree with this, that he's doing this piecemeal. We're going to do exempt Social Security. We're going to exempt tips. We're going to help firefighters out. Overtime is another proposal. And again, it just kind of just some of the things here. And he would consider tax exemptions for firefighters, police, military personnel, and veterans. And veteran disability is already exempt. So veterans in general, a lot of this, and this is not something Trump has articulated, but a lot of his advisors have articulated, larger vision transition away from an income tax system and replace it with tariff proposals. So there's pros and cons to this. Main thing we've talked about is right now we're taxing income. We're punishing production, more or less. People work, you win money, we tax that and punish that. If you want people to work more, don't tax it. If you switch it to a consumption tax where it's you pay more when you buy things, one, you can control that a lot more, except for necessities like groceries, etc., which aren't taxed now anyway. But there are certain things that people do have to pay, but it encourages saving more than anything else. So the idea of changing us from a spend, consumer, retail-focused economy to a saving economy could have huge, massive, long-term benefits for our economy. Is tariffs the right way to do that? I don't know. Again, we're talking about 20% universal tariffs, 60% rate for Chinese imports. The Biden administration said they'd even go higher, 80 and maybe even 100%. So again, and the concern is the math doesn't work. But again, for depending on how you crunch the numbers, I don't trust that very far. But again, it's a lot of changes, and I don't know if all of these are right or smart. And it's yet to be seen how this will work out, how this will shake out. I do think it's great to have to encourage us to be more of a saving society, though. Just got to move on. We've got some other articles here. There's just so much to talk about in this. This is an interesting one. Mark Cuban was campaigning for Vice President Harris in Arizona. And so it's so funny. And this is the hard thing with the Harris campaign, that she still hasn't given a lot of specifics. We're 2 weeks out from the election, and even Mark Cuban doesn't know what she's actually going to do. So, so he's out there, and this is NBC News. This is not a right leaning. This is a fairly left leaning mainstream media article talking about this. And he's at this town hall, and he was asked, quick question, what about unrealized gains? And I guess Cuban is beginning a lot of these questions because it was part of, again, President Joe Biden's 2025 budget proposal to start taxing unrealized gains, a 25% minimum tax on income over 100 million. So again, that's just the start of taxing unrealized gains. So that means if you have an asset and you haven't cashed it out, Bitcoin, things go up, go down, but whenever you get a gain, whenever it goes up, you have to sell some of it to pay this tax. Doesn't matter that you didn't actually get the money. When an asset goes up, you have to sell it. So when, for the rich business owners, when their stock goes up, you have to sell it. And so again, it's kind of counterintuitive. Here's Mark Cuban's response. When I saw that, I went ballistic because that's an economy killer. Pretty strong words. Kamala knows that, said Cuban. You haven't heard her talk about it, Cuban added. That's right. We haven't, one way or the other. So she endorsed President Joe Biden's fiscal plan, and the increases, broadly they endorsed that. They haven't disavowed that. So while she hasn't said anything about it, sorry, this just jumped. The Harris campaign issued a blanket endorsement and hasn't actually spoken specifically about it. And Trump is saying, what is an unrealized capital gain? You're going after assets, general wealth, and taking wealth, just taking wealth away from people. We're going to tax that. You haven't sold it, you haven't realized income from it. We're just going to take it. And the Harris campaign has refused to say we're not going to do that. She refuses. And then NBC News, we're talking about NBC News here, contacted the Harris-Walz campaign for clarification. The campaign declined to comment. So again, going back to Cuban, he says, you're not going to see a top capital gains. He said, if I'm wrong, she's going to hate to hear that. I'll work so she doesn't get elected again. So in Mark Cuban's words, it's bad enough he will work against her. He doesn't think that's going to happen, and prompting laughter from the crowd. So the question is, if they're not saying anything about it, they're staying mum about it, and they've endorsed the general idea, does Mark Cuban know what's she going to really do? Or again, I think Mark Cuban is a little bit delusional here, to be honest. So it's just funny here that he's so convinced that she's not going to do this, but across the board she's going to pass, and it's all about passing more taxes to hit the wealthy, and that's one of the things. At least she has endorsed global taxes and the idea of doing a global tax on the wealthy. So again, this is an interesting article. I don't have enough time for this. This is talking about Harris death tax reform. When the TCJA, the Trump tax cuts, expire next year, the state plan is going to, the estates are going to go from, so there's an exemption now up to 13.61 million. That's going to drop down to around 5 million. But under her plan, it would drop further to $3.5 million. And we talked about this yesterday. The taxes on that would be from 40 to 55%. You add in another 5 to 15% state estate tax. You're looking at half of someone's estate over that threshold to 2/3 of it. The government will just take. So this is, it really is huge. And one of the things I mentioned yesterday, and this is just my own thoughts, and again, I'm not taking this from this is so, well, no, this is Fox News. So it does lean right. But again, some of the biggest concerns here, that would leave us with the world's highest estate tax. They call it the death tax, but that's politics. Globally. But one of the bigger concerns is that it's going to affect a lot of business people. McDonald's franchise owners, if you have a couple of those, family farms, family-owned construction companies, and these are Richard Stern is a Heritage Foundation economist, so right-leaning, but a lot of people are very concerned about this. And the reason for it is you have family-owned companies have gone public about being forced to sell, at least in part due to estate taxes. Passing these assets from generation to generation become very, very difficult. And what happens is you get monopolies. I forget where it is in here, but again, you get large companies are able to snap up these smaller companies, and you get monopolies forming. You get larger corporations become more and more powerful, and it really does take our economy away from small-owned businesses and to big businesses. So Oprah Winfrey at one point came out and spoke very forcefully about this, saying this is a horrible idea. But I guess things have changed. So again, just a big concern out there how it not only hurts people, but it hurts consumers when we lose a lot of our smaller companies that are successful, are thriving when someone passes away. If you tax a business at 45, well, that to 60%, 66%, there's no way they can pay that tax and hold on to the business. I mean, it really is going to kill small companies and allow for large companies to snap those up at bargain deals, further consolidating, helping large corporations at the expense of family-owned businesses, smaller, closely held businesses, which really are the engine of growth. Um, so, in a big sense, you could say this is a huge giveaway to corporations. Now, that never pay a death tax because they're shareholders, horse there. So read into this, study this. These are plenty of topics to discuss and consider. But I want to switch gears to our main topic of the day, and this is another interesting article from CNBC. I have a lot of stuff from them today, and we're gonna really have to dive into this after the break. But it says, "Don't wait to find a tax to prepare for 2025." Again, one expert says 100% recommend starting now. Why is that? There's a shortage of CPAs and tax preparers out there. So this raises some warning flags here that some of them I don't think are warranted. But again, finding someone that's good, that will take care of you, is very important. And I just had a CPA drop some of my clients, even though they had their documents and they're waiting for their tax return since February. Not very happy with that CPA, but he claimed it was overwhelmed, couldn't get to it. I'm like, you should have told us that months ago. So I won't be sending more business his way. But there are plenty of CPAs that we do work with that are looking for more business. They're preparing for it. Finding them and finding someone that's not going to charge you an arm and a leg is the hard part. So we're going to walk through this article and then really talk about how do you get prepared. Now's the time to do it so that you can enjoy your holidays and enter 2025 with your taxes already planned out. And again, our catchphrase is taxes made easy. We really do want to make this process easy for you. And the way to do that is to get ahead of it. The more you're planning for it, the more you're prepared for it, it's going to make next year's tax season easy. So, again, this is Elizabeth Young, Director of Tax Practice and Ethics for American Institute of CPAs. Don't wait until the beginning of 2025. Get in there, find someone, and start on this. If you wait till January, a lot of CPAs are already booked by January. Maybe too late. So we'll continue this after the break. Welcome back, everybody, for this final session here. And again, this is from still sharing this article from CNBC. Want to kind of dive into this. They talk about vetting is important. I agree with that. Vetting is so important, and not so much about the federal licensing or competency requirements. I've had CPAs that were horrible. I've had people that had licenses, had competence, supposedly competency requirements. Piece of paper doesn't make you smart. Sorry. In general, CPAs are more competent, but doesn't mean that they do a good job. And I've had tax preparers that did a horrible job. I've had people that came and found someone, especially if they're targeting a circuit market, like they're targeting police officers, saying we can give you the best deal. How to help out multiple police officers burned by that. If someone's coming targeting your industry, I know how to really help you. Be wary of people selling better refunds. If they can have them take a look at your refund, if they can give you a better deal and explain to you why, then it's good. But again, you also have to vet them not by their federal licensing or competency, but I would highly suggest look at them at their reviews, how long they've been in business, how committed they are. And I can't tell you how many people come to us and say, my tax preparer disappeared on me. If someone's been doing it 10, 15 years, or they've been in the industry for a long period of time, um, again, that would be very comforting to me. But at the same time, it's important to pay attention to what your CPA is doing. Follow up on it. Make sure your return is received, processed, and that you know what's on there. In the case with police officers, they reclaimed plenty of deductions that they didn't even have, overstated expenses. And what happened? They got audited. And when they got audited, it hurt all these people, and the CPA or the tax preparer disappeared. So there's plenty of tax preparers that aren't the greatest, and that's why it's so hard to find a good one. So referrals are a great way to do that, and double check credentials. Make sure they have a valid website, make sure they have good communication, and make sure they're going to get on it sooner rather than later. And some of the best CPAs, they stop taking clients either beginning of January, sometimes even before then. If someone's that slammed, go find someone else that has the time and the ability to take care of your tax returns. So I'm going to walk through this article and then give you my own top things to do to prepare for 2025. And why now? So the deadlines are behind us. I'm sure everybody's breathing a little bit. I got my extension in if you were filing late. Why do I want to start thinking about 2025 now? To make it easier for you. So there's a severe industry-wide staffing shortage. There's a huge lack of CPAs and tax preparers, especially if you have people that need specialty assistance like cryptocurrency, international taxes, complicated business issues. If you've got a lot of investments, not only should you be talking to a tax preparer, a CPA or tax preparer, or you should be talking to a tax advisor as well. So talking to a CPA should just be the first step. Now, there are CPA firms that include those services, a whole package where they will do the advising that will help you financially from A to Z. And I can recommend you to firms that do exactly that for you. But again, she recommends 100% starting now. I do too. Don't wait until the beginning of 2025 because guess what everybody else is doing at that time? January, people are scratching their head saying, okay, I need to start on this thing. And again, if you're just now starting in January, if you have a business, etc., this is why most businesses file extensions and they're waiting for everything to be done. But again, it becomes such a problem now with the increase in penalties on estimated tax payments. You don't know what your business is doing. You can't look at your quarterly numbers. There's so many different reasons to get on top, get ahead of your financial situation. So again, waiting until January or early next year or later might be too late. I do know CPAs that are looking for more business. Again, I just spoke to one on Friday that was launching his business. He's been doing it for years, but he's now trying to do it full time. They say pretty much anyone can call themselves a tax preparer. That's true. But I don't think you have to. One of the things Young's emphasizes having being a CPA and being, having licenses and stuff. I don't buy that. There's plenty of excellent preparers that we refer to all the time that aren't CPAs. But if someone, you want to look at their track record, you want to vet them as, what have other customers said? Do they have a lot of complaints? Are they responsive? Have they been doing it for a while? So talk to them about that. Just don't go in and say, hey, tax prep, I'm going to trust my taxes to you. One of the big things here, and this is, and I know some more advanced firms, that they're having everybody get a P10. Every single one of their clients get a P10. Why is that? It protects you from identity theft, protects your IRS returns. And I actually had an issue where someone claimed one of my sons. So I filed my tax returns. I claimed identity theft and reported it. And so now I've got to deal with this issue. File a P10 wouldn't protect one of my son's tax returns. It would have protected mine though. So and she argues CPAs, enrolled agents, attorneys generally pass competency tests. That's no guarantee. So it might help a little bit, but it's no guarantee. You really do need to talk to the individual, check out a couple, interview a couple before you decide who you're going to go with. And if you need a referral, we do refer people to tax preparers across the country. And again, we have plenty of people that we do work with regularly that we can refer you to. So let's get that information in. Let's get that information to you. And there are free preparation options if you just don't have the money. VITA is one. That's tax counseling for the elderly, or a TCE. There are a lot of companies out there that you can still get free tax preparation, and then the IRS is putting out their free tax preparation, which probably won't start until January if you have a very basic W-2 return. If you have anything more complicated than that, check with a tax professional. But if you have a very basic W-2 return, there are free resources. You can go to H&R Block, Jackson Hewitt. If it gets more complicated than that, get a second opinion. That's one of the biggest mistakes people make, is that when their case gets more complicated, they continue going. When their tax returns get more complicated, they continue going to H&R Block, Jackson Hewitt, and other. You see them all over, tax prep here. And while there can be some excellent people there, more often than not, when it gets complicated, they don't have the expertise to handle those. Again, each of them can vary. Some of them do have the tax professionals to handle that, but again, it really depends. CPAs, enrolled agents, people that's all they do. Typically don't accept walk-in traffic. Well, some of them, the better ones, operate by referral because they don't need new business. But these aren't the people you're looking for because they're already maxed out. Again, talk to your friends, associates to try to get a referral. But again, what cost is a big factor. If you have a complicated case, it shouldn't be a big factor because you're paying small amounts. Now, if you're paying thousands upon thousands of dollars for tax returns, or you're getting charged $700-800 per return, and you don't have a business, it's very possible you're getting overcharged. So this is why I emphasize talking to 2 or 3 people. Again, if you need referrals, I will give you 2 to 3 referrals. No problem. Any day of the week. And the IRS has a database of credentialed preparers. That's not a real way to vet anybody anyway, though. So stepping away from this article, again, it's not, and I just want to emphasize, it's not just CPAs that you want to talk to. If you have a lot of business issues, you want to talk to a bookkeeper as well. So there should be bookkeepers. Tax advisors can help you avoid tax debt legally and prepare, not only for this year, but they can give you advice moving forward on deductions you're not taking advantage of, expenses that you can take, and how do you record that so if the IRS does come knocking and questioning, you have all the proof ready to go. So they can help raise some red flags, but also make sure that you are prepared for the coming year. So things to do, first and foremost, pay your taxes in the current year. So we're in the 4th quarter of 2024. The deadline for that is January 15th. So as you go through there, make sure you're on top of your estimated tax payments. The penalty for not paying estimated tax payments is 8%. I harp on that. I repeat it all the time because I talk to CPAs all the time that are surprised by that. I'm like, oh, okay. And I'm like, are you talking to your clients? And these are people, excellent CPAs. I'm like, oh, I should be emphasizing that more. I'm like, yeah. I can't tell you how many. I'm expecting a wave of people to be very upset and surprised by the increase in uh, um, failure to pay estimated tax payments. And even though the Fed rate has gone down, the IRS has not reduced their rates yet and won't review it until next quarter. Number two, so get on top of any estimated taxes or make sure you're having enough withholdings. If you had anything special happen through the year, you sold any property, you took money out of a 401k, um, you moved assets around, make sure you're paying your taxes for the year as you go through it to avoid these estimated tax payments. And that way you don't get surprised come April 15th. So if you haven't paid the taxes in the quarters as you incurred this income, you're still going to get hit. So you can pay everything off by April 15th and still get hit with this 8% penalty. That's why a lot of people are going to get frustrated. If you're self-employed or if you have a business, get your P&L together. Your bookkeeping should not be done once a year. I don't know how you run your business if you only look at your numbers once a year. You should at least be looking at it quarterly, if not monthly. Quarterly is like the worst case scenario. You really should be able to look at it and say, okay, how did I do last quarter? What's going on? What are my true costs? What's my true income? How did I do this year? Let's make adjustments moving forward. This is, I think, one of the biggest things that hurt businesses is that they don't really know where they are. So having a good bookkeeper doesn't cost you an arm and a leg. They can save you so much headache, and there are bookkeepers that will train your staff to use QuickBooks. Again, or you can have someone take QuickBook lessons, but I would take it from a professional that can help you learn it so much quicker. It doesn't have to cost you an arm and a leg in the long run. You should be looking at your profit and loss regularly, and you should be budgeting. If you own a business, you should be budgeting. You should be planning into the future, not just reacting to what happens. Individually, if you want to get a handle on your money, you need to be budgeting. And there are Dave Ramsey coaches. There's Quicken. There are so many different options to learn how to budget and how to do it regularly. I do refer people to financial coaches, so that will sit down, work with you. Okay, if you're in a horrible situation, even if you're on Social Security, how can we make your money stretch further and work better for you? And then the last thing is line up early and start working with a tax professional. So it's not just, hey, I need to file my tax returns, but I don't have anybody. Now's the time to start looking, form a relationship, and talk to a tax professional on how to do that. So check out their Google reviews, check them out on Instagram, Facebook, see what they're aware of, but read about them generally, because again, some of the larger companies out there, they know how to manipulate Google, so they pay people not to get rid of bad reviews. So again, go to third-party forums. What about this company? What are people saying about them? And it's typical for most companies to have one or two squeaky wheels or someone that you couldn't make happy anyway, regardless. We've had those, but you want to look at the overall reviews, make sure that they have plenty of reviews and that they can take care of you and will do a good job. So call a few people, talk to a couple different tax preparers, and get everything put together. I would suggest October, going into November. When Thanksgiving starts, this is going to be the furthest thing from your mind. And it should be, because you should be able to focus on family through Thanksgiving, Christmas. December has all the holidays leading up to that. If you're not celebrating Christmas, Hanukkah, there's so many different holidays, and it should be a time for family. So that way, really this next month before Thanksgiving should be the time to really get a handle on and get ahead of your taxes and your tax situation so that you can move into the holiday season and really enjoy it. And so again, this is how you make your taxes easy. So not only can breathe easy, but avoid a lot of penalties, interest, and again, give yourself peace of mind so you don't have to worry about the IRS or state taxes. That's our goal here. So have a great day, and thank you for watching.